Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 16th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you some different option strategies that you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, really not a whole lot to see here. They have a couple of crazy numbers that it came out with, but really aren't anything that is going to drive the market at like hourly or average earnings index came in line with expectations. Then we got back here in the United States, we got our capacity utilization coming in at 78.8%, lower than the expected 79.2%, so a bit of a pullback there on capacity utilization. Industrial production comes in at negative 0.1%, expected to be a positive 0.2%. That number is being drugged down by the autos and mining. I'm surprised mining's driving it down because with gold cruising higher, we would expect mining to kind of push a little bit on that side of the number, but it fell 0.8%, and we saw the biggest drop in auto production since 2014. I think it was like October of 2014. It came in at, or it slid about almost 7%, that driving down the overall economic data point there. Also, we got the National Association of Home Builders, which is a housing market index, came in at 63, which was expected to be 63. So in line there on the housing front. That's been something that's been a bit of a concern because remember, we've seen those housing permits all over the place. This housing index is a gauge of how those home builders are feeling about the overall economy. So obviously not really too concerned like we see coming up in the numbers, giving us a bit of a pause. All right, overall economic picture done. Now let's get on to the overall markets. We've got crude oil here just slightly in positive territory by about a dime. One thing to note, this 63.08 area, this Fibonacci is acting as a support. So we've seen this before on other occasions. You know, when I do my Fibonacci's, everybody can see I kind of have a tendency to mess up with my Fibonacci's. Some people say, well, what I do is I try and draw these lines in so they have a tendency to line up with some other major indicators that I have. That being said, sometimes my Fibonacci go a little bit outside the high where most people might put a Fibonacci there. But anyway, you can see that this is working out quite nicely because I look at it where, look, we've seen this 63 line right there. I should probably erase that. That was such a terrible line. Anyway, you can see right here that we got this 63 coming in, and that's acted as a resistance on the way up, and now we're acting as support here. So my theory was that we would drop down in between these two here and kind of trade it up, fill in a little bit of this low volume node because it's lining up with the 200-day. We've got the 50-day, so we get that cross over. That's a bearish move, but you know, once we're trading above this 200-day, it's going to be really hard for it to pull back down. So actually, I misspoke there. If we get this cross, this is the 200-day crossing over to the upside of the 200-day, that would be a bullish sign. Sorry about that. Misthought my simple moving averages there. So I would like to see it come back down here so that we can fill it in. But looks like the market wants to push higher. I can't see the market really sustaining those kinds of numbers going forward. Here, let me pull this bad boy out a little bit more so I don't have to get all up in the face of the camera. All right, so there we go. We've got that going for us. I've got it a little bit closer, a little bit easier for us to see now. All right, let's move on to gold futures. Gold futures taking a huge free fall here, and somebody decided right off the open to sell $1.6 billion in gold bullion, which has really caused this market to fall out. So 1.6 billion, that's a B, ladies and gentlemen. Somebody sold out of that, causing the market to sell off. Nobody knows yet. At this point on the floor, we used to be able to give you a little bit of rumor because we could see who the player was, we could see who the paper was, but now it's online and it's a little less transparent in that aspect. So $1.6 billion is causing gold to come back down and below this 1280 area, which I was expecting to hold a little bit more. A settlement in here, we would easily expect the market to want to fill in this volume node here, which is usually what we'll see when we have two major nodes here. Price has been accepted higher, and then as that happens, we start seeing this start to fill in. All right, then we've got gold futures. Then we got the bonds coming off also today, because the equities are starting to gain a little bit of momentum here, and there's a lot of people out there talking that we might see a melt up. Now, I'll talk about this a little bit more. Well, hey, let's pull up the charts of the equities. But the bonds really starting to fall over right now. Then we go over to the VIX. VIX holding its own a little bit in negative territory out of the teens. You can see the 12 there. So we want to see volatility start to spike during these earnings seasons, because I haven't been able to add a whole lot of earnings trades. I'm going to bend a couple of my rules for this earnings season, I believe, and that's going to be on the implied volatility that I need going into this earnings event, because I know that volatility is going to drop off after that earnings event. So I'm going to start taking advantage of a little bit more of these earnings, despite the fact that one of my rules of the high implied volatility is not necessarily going to be there. I'm going to try and pick the ones that are some of the plumpest premiums I can find, for lack of a better phrase. But knowing that the volatility comes out is what I'm going to be looking for there. All right, so the Dow Jones Industrial Average up about 44 points, almost 45 right now. Yesterday, I was looking at these two little candles over here on the side here to be a topping. Now we kind of popped above that, so it's not looking so great for that topping pattern right now. Dow Jones didn't really look that great. It doesn't have the overnight session either. But if we go over and look at the NASDAQ, you can see I was looking at specifically this particular candle right there to be one that was making it look like a bit of a topping pattern. We don't have any confirmation. I needed to get a big candle, with this kind of candle. We want to get a candle, if we are bearish, to have it confirm and settle like that, fill in to create that downward momentum. We're not getting that. We got the confirmation to the upside there. So that is out the window, as we would say. Now, again, we talked about this yesterday in the daily market commentaries as to topping patterns. Now, this is what I was talking about. We created something where we've got this candle that looks like that, right? So we fill that in. That's bullish. Then all of a sudden we got this candle yesterday where it's a bit more of a topping pattern where it kind of creates like this. Now, whether it's green or red over here to the side, red is obviously better. That would make it look like a top, all right? But today, what's happened is this market has since, from the open come in, and we saw the green candle here where we got that one right, and then we got the red candle where we got this as a top. Now, I get into these a little bit early before it's confirmed. Well, today, lo and behold, now that's a green candle, we've got this pattern. Well, at a top of a move, that usually indicates continuation. All right, there's still no confirmation. We need a confirmation like a green candle coming up like that to confirm the upward trajectory. But usually with these two right there is what we're looking for to continue this pattern higher. So the next stop would basically be that 2950. So 2950 is probably where this market wants to go before we see the next stop. It's not too far away. Another 40 points that could be done in the E-mini S&Ps in 1 or 2 days easily. So I'm looking for that target right there. Having said that, I did cover my SPY trade that was playing to the downside, giving me a little bit of protection. I pulled the ripcord on that based on that chart setup there. Remember, I was looking at this being a topping pattern yesterday for my what was it? I think it was yesterday even. Yesterday I was looking for that to be a topping pattern. Didn't get the confirmation today. It broke my trading pattern, right? So I'm out. I pulled the ripcord on it. I maybe done buying puts in SPY for the foreseeable future at this point until I get confirmation of this top. But you can see overnight inventory here got long, and off the open we have seen that market inventory get flushed out. Now what are we going to do? We've come down to support. We've talked about points of control that we come down and test. This one's still not tested. This one's still not tested. Nor are all of these. Actually, that one is tested there, so we could get rid of that point of control there because it has been. This one down here, maybe somebody could say that one, but we still have a couple little points of control to test before we start moving forward. The market likes to clear those out before we start resuming. So you might see something come down to 29.10. That would probably be a buy zone if you're bullish on a day trading session, because we had expected to come out, clear this point of control, and then continue back higher. Maybe up play between that 29.10 and that 29.50 I was talking about for your range to trade on E-mini S&P, especially if you're on a day trade type situation. All right, on to the overall markets. TLT, this is a trade I added a while ago, playing this to the downside. That one's working out. I was considering covering this one earlier on today if the equity started rolling over. That didn't happen. The equity started rallying, and SPY doesn't have the overnight session, so you can see this here. This also looks very much like a topping pattern. Anytime you get those two dojis, I talked about this, once they're right next to each other, even if there was one red and one green, you get those two toppings like that. That seems like it is a very bearish setup. Today, though, we've gotten this. Even though it's red to the upside, that doesn't mean anything. It's not confirmed to the downside. Therefore, I'm looking at it like it's not confirmed. Therefore, we might just continue to move higher. Again, this line lining up with the previous 29.50 in a sense, but doesn't have the overnight. So I would say it's 29.25 or something like that is probably where this market wants to go to. So I'm out of my SPY trade. And if you guys remember, I went into the June, give myself a lot of time to be right, not get that theta decay, and bought the 284 puts that I originally paid $3.98 for. I got out of those this morning for $3.38. So lost about 60 cents on that trade, but it was all for this topping pattern setup. As soon as this level got broke, I needed to get out of that trade because my trade was set up based on a technical setup, and when that technical setup is broken, that's when you pull the ripcord. I followed my rules on that and stuck with it. So you guys should follow those rules that I set up. Stay mechanical. That will be what gets you to the end of this marathon of a trading life that we have. Okay, so stay mechanical, keep that pace, just constantly churn. All right, and that's what we're trying to do here. I haven't added anything because I'm waiting for trades to happen, or trying to keep my money on the sidelines right now for those earnings events. So I'm holding off right now so that I can have that margin readily available at any moment. All right, that's all I got for you guys. What is it? Thursday's webinar? Because I'm still, even though we've been doing this for almost a year, I keep confusing Thursday, Friday webinar. It is on Thursday, so check that one out. I've tweeted something out. If you click on that link, you'll get the special offer. So go follow me on Twitter at Wolfman's blog, or go to protraderstrategies.com and sign up for that webinar. That's all I got for you guys, other than if you can't take that, take it easy.